Hey guys, my name is Pratik, and I'm very excited to talk to all of you about the Nasdaq index. I am currently heading passive funds at Motilal Oswal AMC, so I'm taking care of all the passive funds. So we currently have 6 index funds, 1 FOF, and 3 ETFs, so 10 funds in total. So as of now, we have index funds, ETFs across large cap, mid cap, small cap, multi cap sector, and also international. So looking forward to working with all of you, and thank you, Groww, for having me out here to talk about the Nasdaq fund. As you can see, I'm in New York City right now. So hello everyone. So what is the Nasdaq index? So the Nasdaq index is one of the most popular indexes in the world. It's probably the second or third most popular index after the S&P 500 and also the DGIA. It was formed in 1980s, and even though it's also an exchange, it's also a very popular index. So what is the Nasdaq comprise of? The Nasdaq comprises of the top 100 companies in the US that are non-financial. So the reason why the Nasdaq is special is because the Nasdaq comprises of some of the most fastest growing companies in the world. So it is currently has the top 100 companies. So you can include Facebook, Google, Amazon, Coca-Cola. So you're really getting some of the most fastest and also some of the most known brands that all of us use every single day. So I think anyone who's looking to be a part of companies that they consume on a daily basis, the Nasdaq is actually a great fund to have. So before coming to the Nasdaq, I think let me spend a couple of minutes talking about the importance of international investing. So international investing has become extremely important. So far, I think if in the last few months, we've had thousands of investors come in and buy the Nasdaq fund. The reason is because I think the three main reasons to why international investing is extremely important and why every single person should have at least 5 to 10% exposure on international. So number one reason is dollar hedge. So, when I went to school 10 years ago, the dollar used to be at 40. Today it's at around 75 rupees. So if someone had invested in the Nifty 500 or Nifty 50 10 years ago, their returns in the US would have been 0.8%, whereas someone in India would have made between 9 and 10%. So the dollar has eaten up a lot of returns. And if you think about that, a lot of our expenditure today for us, say you, me, everyone, is in dollar. So we're buying Apple iPhones, we're buying Nike shoes, we're sending our kids to college in the US and UK, where, if I go to my same college, it would cost double the amount as I did 10 years ago. So, so our earning is in rupee, but our spending is in INR. And because of that, it's important for all of us that we spend according to our goals. So if our goals are spending in USD, it's important that our investments also match those goals in terms of USD. So dollar hedge is extremely important. So, and every investor should have allocation of 5 to 10% because you're fighting your wealth. Even though you make a lot of money in India at a global level, you're still losing a lot of money. So second reason is correlation. So what does correlation means? Correlation means how multiple assets move together. What we have seen is that international funds and say Indian funds have a very low correlation. This is actually a great thing. Why? Because what it does is when you add these two together in a portfolio, your overall portfolio volatility goes down dramatically. So for the Nasdaq, for example, the correlation of the Nasdaq between the Indian indexes is 0.2%, is less than 0.2%. What that means is that, if an index goes down by 10% in India, the Nasdaq will only go down by typically 2%. So I think overall volatility of the portfolio goes down. Also, you get a lot of downside protection, because of having multi-asset classes in your portfolio. So I think correlation is very important for asset allocation. Third reason is very important is that, today, I think I spoke about this earlier, but, an Indian company today is not competing. So for example, a Tata Motors today is not competing with Maruti. Tata Motors is competing with a Hyundai, They're competing with the Kia, and also we today buy products from Flipkart and Amazon that are owned by US companies, Amazon and Walmart. So, I think if you look at consumption patterns today, I think it's important to understand that, I think we should, the world is getting a lot more global. And because of that, our investments should also be very international. So today, India is maybe 2 or 3% of the global GDP, and all our investments are in this one country, and the world is getting more flatter or more global. So I think it's important to have some of your allocation to US equities, which is more 30 or 35% of global GDP. So by having a US fund in a portfolio, you're getting the fastest growing country, which is India, and the largest country in the world, which is the US. The reason why the Nasdaq is also a really good fund is because, most people say it's a US fund, but it's actually not. It's actually a very global fund. If you see all the top stocks in Nasdaq, Microsoft, Apple, Google, Facebook, all of their actually incremental, or all of their revenues are actually coming from the global operations. So their local operations are growing at say 10, 15, 20%, but the global operations are growing at 40, 50%. So a lot of the value add, the Nasdaq, I think would be between 13, 40% of the revenue of the Nasdaq companies come from global operations. So it's actually a pretty global index, and I think it's a good way of someone trying to diversify into global funds. So how do you invest in Nasdaq? So Motilal Oswal has two funds, both are the same thing. So one is the ETF that we launched in 2011, and if you look at the ETF, it's if you just look at pure returns, I think it's done phenomenally well. So post the crash, so before the crash, you were looking at, so since we launched, the Nasdaq has gone up 4 times. This is in the US. The Motilal Oswal Nasdaq fund has gone up 6.5 times. And I think the reason why there's a difference is because of the dollar hedge. The dollar has given you 2.5 times more returns. And also in terms of risk, the Nasdaq is obviously it's a little bit more technology heavy, but also overall, if you just combine with the portfolio, overall risk comes down. So I think it's important to, I think the returns have been great because you're buying the fastest growing companies in the US. And also in terms of how you can access it, the ETF is what we have. When we launched the ETF, it was in 2011, we realized that the ETF is not a very customer friendly instrument. For an ETF, a customer has to go through a market maker, broker, an exchange, which was very painful for a individual investor. Plus, you need a demat account, you can't set up SIPs. Whereas in an index fund, which is the FOF, is what we launched 14 months ago. That is a much more friendlier instrument. In fact, today our FOF is actually bigger than the ETF. So we've got hundreds of crores coming in the FOF just in the last 12 to 14 months, which shows that it's a much easier instrument for people to understand. But I think the number one question I get today is that, is there a difference between the ETF and FOF? The answer is no. There is not much difference. I would recommend investors to buy the FOF, which is a much easier instrument. And the returns, if you've seen the last 12 months, have been quite so much in line. The only difference is that, today we're seeing unprecedented volatility in the indexes worldwide. So people need to understand that, Nasdaq as a price will not match the Nasdaq returns in the US. Why? Because there's a 1-day lag. When Indian markets shut, the US markets open. When US markets are open, Indian markets are shut. So because of the 1-day lag effect, people can expect the deviance between the underlying ETF versus the price that you're getting, the underlying index and the ETF price. So which is why, what I urge investors is to not really look at the returns as much. I can assure you that, our tracking error of the fund is under 0.2%. So if an investor was buying the Nasdaq today on the FOF format, I can ensure that, if you hold on to it for say till volatility comes down, you will automatically see that the return that you're getting is in line with what the Nasdaq is giving. So with that, I'd like to conclude this. If any of you have any questions regarding the fund, feel free to get in touch with me on Twitter, LinkedIn, whatever format. You can get in touch with our AMC as well. And look forward to working with all of you again. Thank you so much.